Hello, everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with any trades that you take. No one trade is guaranteed to profit. So you want to manage risk with each trade in a way that makes sense for you. And we'll go over some ideas in that regard as we build some trade ideas with today's session using some of the tools that are built into our web trader and app that make risk management quite a bit easier. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 based accounts, but with the advanced functionalities, not just with the risk management tools, but also technical analysis tools, which we'll look at some today, and also fundamental analysis tools with news features and such. Our app can be found in the major app stores. You also can find links to the app stores here on our website. And all of the features that we go over in the web trader are also available in our app. Now, if you log in here in the upper right corner, we'll be in the web trader. And I know today's session, we're focused on technical analysis, but it always makes sense to also take into account the fundamental news, just to get a feel for the sentiment and which way the wind is blowing, maybe, so to speak, with different instruments. And so heading into this week, what has been happening since the start of the week and up until today, we're in the lead up to some really big numbers and data that are coming out of the US. And so as the week opened, we've had some pressure on the equities, on the stock market, with major indices and stocks, especially the tech stocks, the AI tech stocks have been the biggest movers in the downward direction, which would be expected since they were the largest climbers over the past year and a half or 2 years. But we saw a big pullback this week moving into today, and a lot of the fears around the jobs data and wage data coming out of the US this Friday. It's the non-farm payroll, the largest jobs report each month out of the US, and it gives a really good indication as to the health of the US economy. So there will be a big focus this Friday on those jobs numbers, and also along with the jobs numbers will be data on wage growth and some other figures that give some really good insight into the health of the U.S. economy. And many times the phrase is, as the U.S. economy goes, so goes the rest of the world. Being the largest economy in the world, many times if the U.S. catches a cold, the whole world sneezes. It's kind of the phrase a lot of investors use. And so there's a lot of fear that the U.S. data in the past weeks has come in worse than expected, especially the jobs data. Also, the slowdowns in inflation, which have been welcomed, have actually been larger than expected of late. And so there's fear that there may be a recession type situation that could be building in the US with some of this data coming in worse than expected over the past couple weeks. And so there's fear leading up to these big numbers this Friday that could continue. So yes, the market has been happy that the US is finally alluding to the fact that maybe interest rates can come back down some, that they might start cutting interest rates in the US. They've almost as much as promised that they will lower probably 0.25% rate cut. Some are anticipating maybe something larger. Most are anticipating multiple rate cuts, adding up to as much as 0.5% to 1% decrease in the federal interest rate in the US by the end of the year. All of this anticipation is because the markets in the US, the economy and the economic data, I should say, in the US has slowed down more than expected. And again, it's a breath of fresh air that inflation is coming down now when it's been so high. But now the fear is it maybe is too much of a slowdown, and are there recessionary data now that will come? The JOLTS job openings data that came out today out of the U.S. was worse than expected. So that could be feeding a little bit more fear into the market, but the bigger data really is Friday. But there are some jitters on the market because of this situation. And we're not even mentioning the potential escalation of war in the Middle East. If that were to happen, I think things have calmed down a bit in that regard, but it's still not a good situation there either. So we have to keep that in mind with our risk management as well, that anything in that regard could pop up on a moment's notice. Okay, so if we start to look at some of the signals, maybe the technical signals from Trading Central, we can keep in mind what we just talked about. And maybe we start with the equities. We could look at something like the US 500 and see what's happening. Now, the signal on the US 500, if we click the little symbol here, it'll load the signal into our order window. It's a sell signal. Doesn't surprise me. We just talked about why. It's probably a sell signal. A lot of fear leading up to Friday's numbers. The numbers that came out today for job openings were worse than expected as well, feeding into the fear that the U.S. economy and especially the job sector could finally be taking a hit. And so we see after a bit of a bounce earlier today that maybe the market is trying to sell off again as we look at the 1 hour candles here. So this is yesterday's drop. If we want to do a technical analysis outline, here's the support level on the 1 hour candles. So this was the start of the week. This was the end of last week here, Friday, support level established. And then this is the start of the week here, Monday, finding resistance up here. Okay, with the fear about the non-farm payrolls, this climb it couldn't break this price level here. So we have resistance here from last week that continued this week. We have support here that continued and then was broken this week. Okay, so if the market tries to rise before the numbers come out Friday, it looks like this should be a spot of resistance right here. Why should this go up and break back above this broken support if we don't know the answer to what's the non-farm payroll numbers? What are they going to be on Friday? It's the fear that they'll be bad that caused this break in the support level. So for this to try and climb back up and break back above without knowing the answer to that data from Friday, I have a hard time feeling that will happen very easily. Okay, so if I was selling right now, I would probably put my stop loss above this resistance here. Okay, the signal here has the pivot level at 55.68, which is a bit lower than that. 55.68 is right. Look at that. Look how accurate that signal was. It's right where it reached and then reversed just 2 hours ago. Okay, so looking at the signal, they said sell, but if it breaks above 55.68, then it looks like it could uptrend towards 56.38, which is up in this area up here above this broken support. Okay, so it did not break above the pivot of 55.68, which is here. So it's still a valid sell signal. Okay, take profits. They're suggesting there are support levels down just below 5,500 at 54.92 or as low as 54.51. So we can take a look maybe at a little bit larger candles. And let's see if I should be able to get this chart to allow me to drag it up. There we are. Let's see if there's a support level down here somewhere. 54.51. That's right about here. And this is where they're saying you could take profit, either at this first one, but as low as 54.51. Okay, so the expectation of this signal is the fear will continue leading towards Friday. We understand fundamentally that makes sense. So had you saw this signal an hour or two ago, you could have sold from closer to the pivot level and you'd already be in a nice profit. okay? But even if you sold now, the expectation is that it's going to break yesterday's low and push down towards 54.50, okay? Let's go to larger candles and see if we can find why that's a support level, and there it is. Okay, here's 54.50, which is this red line here on this chart. If you follow it across, this was a resistance level on the one-day candles going back a number of weeks, actually. These are one-day candles. So it was resistance, resistance, resistance on the one-day candles, meaning the price had trouble going above for a few days, and then once it went above, it blew past it. So this was resistance, and this was a breakthrough candle. There was some sort of fundamental news, some announcement maybe, that caused excitement on the market, and you see this break through the resistance here. Probably some data came in weaker than expected, and everyone said, hooray, they're probably going to lower interest rates then. And the market cheered that weak data, and up went the market past this resistance, okay? So here's the climbing with all the excitement about interest rates probably going to be lowered. Here's a pullback, here's climbing again, and now here we go with a pullback again. So the signal says sell, and if this is an old resistance level, then here it becomes support. It hits and bounces, hits and bounces, hits again and breaks it. And then once it went back above here, it tried to come down and it became support again and went up. You see the wick on this one-day candle. So that's why this price was picked out. It's an old resistance slash support level from weeks back on the one-day candles. That's why they say if this does drop, you might think to take profit somewhere near here because it might find support there again like it did back here. Okay, so from a technical perspective, if you expect this to drop towards Friday, towards those large economic announcements out of the US, then a spot you might think to take profit is if it starts to get close to 54.50. Okay, so let's go back to smaller candles to zoom in a bit. And we can say, okay, let's say I'm going to follow this signal and I'm going to sell. Let's go smaller candles, maybe 30-minute candles. And so if I go ahead and say, okay, let me sell on this signal, that's what it's saying I should do. The fundamentals are maybe on my side. The downtrend is showing itself again on the small candles. And it reversed from the pivot line like the signal said it should. Okay, so take profit then, 54.50 we said, right? Or somewhere near there. That's what the signal said. And that's where we saw the support level on the one-day candles where it might have trouble dropping further if indeed it does reach that level. So maybe slightly above that, 54.55, okay? Slightly above the support level. Stop loss should be above the pivot level at the very least, right? Above today's high. If it reverses and goes above today's high, then that makes sense. That would be an uptrend. And you might decide, okay, the momentum changed. I'll get out of this trade. As long as it doesn't break above the pivot line, which is today's high, then you would stick with the sell, according to this signal. So stop loss, 55.67 would be above today's high. So let's say 55.68 to be above that pivot line. So 55.68 on the stop loss. You could even go a little higher if you wanted, 55.70, just to be clear of it. And you see the risk is less than half of the potential profit. So even though this already dropped from the pivot line, it's still an opportunistic entry point from a technical perspective because I'm in the direction of the trend, in the direction of the technical signal, in the direction that the fundamental news maybe says I should trade, and I have a better possible profit compared to loss, even following taking profit before that support level by 5 points. Okay, now all I have to do now that I have the trade set up is decide what trade size do I want. I've got my entry price, exit prices for take profit and stop loss. Maybe I don't want to risk 5,000 though. So I adjust my trade size accordingly. So maybe I take 0.2 as a trade size. Now I'm risking 715, which is a little more than 1% of my balance. Okay, 629 would be 1% of my balance. And you can risk whatever percent you want. You could risk 2%, 5%, 0.5% per trade, whatever makes sense for you. But at least know how much you're risking and then carry out that plan. Okay, once you decide how much you're comfortable risking per trade. I'll shoot for 1% here. So it looks like I need a little bit smaller, maybe 0.18. And now I'm risking around 1% of my balance. Okay, maybe 0.17, but it's moving because the market's moving. So now I'm trying to make over 1,300, risking about 600, and I make my move. Okay. Technically speaking, I'm trading with the downtrend. I've got a resistance level that was confirmed and it dropped from it. I have a larger overall downtrend that I'm trading in as well. And the technical signal from Trading Central says sell. Now, this is a way that I recommend that you qualify the signals before you trade on the signals. Technical signals are great. We provide free signals in the platform and in our app. They come from Trading Central, and they're professional analysts there that are watching everything about the market when they send the signals out. But new information comes out after the signal is sent. So, you know, the jobs numbers, the data that came out of the US today on the jobs openings, they were worse than expected. So that helps support this signal that we looked at. But if they'd have come out better than expected, you might say, I know the signal says sell, but look, it's starting to climb, and the data out of the US was better than expected. So maybe it won't drop. So you can start to look at the most recent information, including the fundamental news, and then factor that into how much do you trust the technical analysis in the technical signal. Okay? Because the signal is only as good as the most recent information that could cause momentum for the signal or against the signal. Okay? The technicals can be all there, but if the fundamentals swing, that can work against the move. And right now we see this momentum picking up in the drop, for now anyways, because the fundamental news kind of pairs with the technical signal right now. Okay? But boy, this was a pretty solid signal because they had the pivot line exactly where this pivoted and dropped from. The pivot line was just above what it reached. Had it broken above this pivot, we probably would have saw more momentum up. And that's why they said if it goes above, don't go with the sell signal anymore. Then it would have been a buy signal within that signal recommendation. Okay, let me pause for a moment. Any questions? I'll wait to see if there are any questions that pop up in the chat box. And I'll keep an eye. If I see any questions pop up as I'm going along, I'll address them as I see them. By the way, I don't know if you're aware of some of the functionalities on this platform, but if we go to the positions where the open trades are, this is the trade we just opened. When you load the chart where there's an open trade, what you'll see is you can adjust your stop loss and your take profit by simply clicking and dragging. So if I want my stop loss to be higher or lower, I can simply left click and drag it up or drag it down. Okay, so I can adjust these at any time. And my take profit is down a bit off the view. I need to go to a larger candle. And we'll see that my take profit line is here. And I can adjust that at any time as well. Just left click and drag, and it'll go to any new location that I want it to be. Okay, so you can adjust manually as well. If you go here, you can edit the settings, take profit, stop loss, etc. Or you can do it right from the chart, similar to the MetaTrader platform. So just keep an eye. We're adding new features all the time on our WebTrader, and I just was in a meeting today. There are a number of new features coming, I think, within the next quarter. So there'll be some nice upgrades to our charting, in particular, with the next upgrade on our WebTrader. So keep an eye out for that. Now, we can look at some other instruments and try and work through some of the technical analysis that we see. I mean, we can use the signals again, but we've done that. So maybe we freelance a little here and draw our own support and resistance levels, do our own technical analysis a bit, and see what we can find. So if we're looking at something like gold, You know, it's interesting. Gold is a safe haven and tends to go up when there's fear, and there certainly has been fear this week, and gold certainly bounced some. So it makes sense. We see the climb here today. It dropped a bit as the US dollar strengthened yesterday, but we do see gold making a recovery. While the US 500 is continuing to drop against the US dollar, gold is going up against the US dollar. And it makes sense from a safe haven perspective that a safe haven metal like gold could climb even if the US dollar is pulling other instruments down. So the question is, do you think that the uptrend here can continue? And if so, how far? Now, if we look at larger candles, we're on the one-day candles now. I see a support level. Let me just pull one of these old lines down that I drew right here. And I see a resistance level up near the all-time highs. Okay, so right now, gold has been ranging between this resistance level where it had trouble going above once, twice, 3 times, and then finally broke above this resistance and then found new resistance up here and respected this one as support once it broke above that price level. So resistance, support, bouncing towards resistance again potentially, which is up at the all-time highs. So, or all-time high, I should say, not plural. But it tried to break multiple times the all-time high. So I guess that's why I said all-time highs, because it reached slightly different levels, but near the same price with multiple attempts up near the all-time high. So it looks like it wants to climb right now. It's bouncing off the support level. Is there reason for fear? Yes, until we know the data on Friday, there's reason for economic fear out of the US in particular. Is there reason for the US dollar to weaken against gold in particular? Gold's a safe haven, so yes. The US dollar, if there's fear about the US economy slowing, that's actually increasing the likelihood of the rate decreases in the US. So there's reason for the US dollar to weaken in particular as well, aside from gold climbing as a safe haven. So I can start to walk my way through the fundamentals and say, yeah, it makes sense that this would bounce and that this support level might hold, as it's showing it tested once and bounced, twice and bounced. Okay, then I look at the technical setup and I ask, is it opportunistic? Meaning there's a larger distance to the resistance for me to make a larger profit compared to the distance where I'll have to put my stop loss to be below the support. Yeah, slightly better potential profit than risk. Okay, so then it makes sense to make the trade from a technical perspective. A confirmed support level with a bounce, a resistance level a good distance away, and an uptrend. Okay, so from a technical perspective and fundamental, it seems it makes sense. But there's no guarantee, right? So there's a couple different ways we could protect this trade. I can do the typical take profit and stop loss. Okay, take profit just before the resistance at 25.28 or so. So let's say 25.28, because the all-time high is actually a bit higher than this line. So take profit 25.28. Or so, you could pick a slightly different take profit number. Stop loss below this support level, so somewhere around 24, let's say 73, something like that. If I move this down to be below those wicks, 24.70 gets below these 2 days. If it breaks below these 2 wicks, I think we have a downtrend at that point, right? Technically speaking. So 24.70 makes sense for a stop loss from a technical support level perspective. Okay, so my potential profit, as I suspected, is slightly better than what I'll have to risk. Now I just need to change my trade size. So 0.5, let's do half a lot. I'm risking 1,300. I need about half that trade size, right? 0.25, and I'm risking the amount that I simulated, which is around 1% of my balance. This is slightly more than 1%. So I could go 0.23 maybe. Okay, now I'm just below 1%. I'm nitpicking now. 0.24 gets me almost exactly 1% of my balance. And again, you can pick whatever percent of your balance you want to risk per trade that makes sense for you. But I'm showing that I can risk manage, and I can make this trade in a way where I have a set risk to my stop loss and a set possible profit to my take profit. So now this has to break the support level and come down to this level here to hit my stop loss. My take profit is just before the resistance level, so it doesn't have to break the resistance to hit my take profit. Okay, so a nice technical setup where we see a ranging pattern. Ranging means it goes up to a price and down, and ranges up and down between those two prices. That's the pattern we see, and we don't have the big news till Friday, unless some unexpected headline hits, which could happen. But barring that, maybe this ranging pattern continues for us. Okay, so that's a technical strategy, trading on a ranging pattern between two prices if you don't expect big enough news to break that ranging pattern before it could potentially reach near your take profit. Okay, now would be the opposite if today was Friday and it's Friday morning before the big NFP announcement. You might be looking for entering a trade when it breaks out of the ranging pattern, depending on how the news comes. So it would be a different strategy if we're closer to those large announcements. Okay, so ranging pattern trade. Now, we also could do a trade with a different risk management scheme. I could do the same trade, okay? Similar trade size, similar take profit, or maybe even higher. Maybe in this case, I'd say, because I'm going to use a different type of risk management, I can be more patient and hope for an even higher climb to 25.50, something like that, to a new all-time high. Okay, I could even put it at 2,600 and start to look at, okay, how much is the protection cost if I protect through Friday's announcements? Let me protect by, not by the hour, but a couple days protection. Takes me to after Friday's non-farm payroll and wage growth data out of the US and unemployment numbers and everything else that comes with it on Friday. It's only costing me $350 for the protection. You pay that up front, but then that's all your risk, other than overnight interest, which isn't much, to hold the trade for a couple days. This is your only risk. If you pay the protection to the end of the protected time period, you have no other risk. You can get all the way through the announcement. And with the non-farm payroll announcement, gold could easily break this all-time high and go towards a new all-time high if the data comes in the right way. If it comes in the other way and gold drops, in this case, if I'm buying on the trade, if gold drops $100 an ounce, for example, I'm protected to the end of the protection. It doesn't matter how far it moves the wrong way. I'm only down what I paid for the protection. So my profit could be 2,600 to a new all-time high. My risk is capped at 350. Okay, so you can make the same trade, but with different risk management plans as well. So I'm going to go ahead and pay the 350. That's only 0.5% approximately of my balance. I actually now could go after a larger trade because I'm using different risk management, 0.45 maybe, and that's risking about 1%. I'm paying it up front, but now look at my potential profit, almost $5,000. I would gain like 8% or so onto my balance with a 1% risk, with this risk management strategy, and I can be so much more patient. Because if it goes the wrong way the next day, I don't care. I'm covered. I can wait until the announcements come in and see which way the movement goes for me. So this is just a different risk management plan for the same trade, a different way of protecting your trades. And this is another one of those advanced tools that are only available when you're using our web trader or our app to trade on your MT4 or MT5 account. Okay. Any questions on that? In terms of using the protection feature, AvaProtect. It's available on gold, silver, and FX pairings. I'll pause for a moment to see if any questions come up regarding what we just went over. Gunnar, I see both of your questions. Sorry, I missed it till now. You're asking first, where's the chat box? And I have to tell you, I haven't been on the client side, but I believe there's like a question box that you should see somewhere there where you can type your questions and communicate. You can give input too. Doesn't have to be just a question. You can ask to look at a particular instrument or give some input that you might want to share. But somewhere there's a way to communicate. There's a box there for putting questions and input. Okay. Sorry, I can't be more specific from what it looks like on the client side. Your second question, what about NVIDIA? You're asking, is it time to sell at a loss or what? Or should you wait for the rebound? Listen, there's a lot of pressure on the AI tech sector in particular because of these fears about an economic slowdown, especially an economic slowdown in the US, but also potentially other areas around the globe. So there's going to be some volatility there, I think, especially through these announcements on Friday. There could be more volatility. We saw, what, a 10% pullback or so in NVIDIA yesterday. It was trying to bounce earlier today. And now I saw the last I looked, it was pulling back a little. Listen, when there's that much volatility, it's hard to predict the direction. And if you're trying to do short-term scalping, it may be difficult. You know, NVIDIA as a company for a longer-term move, listen, they're a very solid company. They're diversified. They have market dominance in different sectors, including not just the AI sector, but including the AI sector. So they're doing things that other companies just haven't been able to do as well as they're doing them. And I think the expectation long-term is that they'll continue to be a very good company with very good returns. So in the long run, I think it's maybe a safe holding for NVIDIA, in my opinion, to expect that their stock price will recover from the pullback and eventually climb more. Now, that's not advisement. You know, I'm not telling you everyone should go out and hold NVIDIA stock long term, but that's what a lot of the analysts believe about NVIDIA, and it makes sense. Okay, that long term, they might be a good stock to hold within your portfolio. Short term, right now, like I said, there's a lot of volatility. Those of you that like to scalp short-term trades, you could probably catch some nice spikes up and down as we head to and through Friday on NVIDIA and other stocks. But in particular, the tech sector, the NASDAQ 100 and a lot of the tech stocks on it are getting hit the most with these fears, and simply because they've climbed the most. They've risen so far, so fast, stocks like NVIDIA, that it only makes sense if fear is hitting the market that they could continue to have even more of a pullback in the short term. Okay? I'm sorry I can't be more specific and tell you, hey, buy NVIDIA right now or sell it. But certainly there are opportunities there for short-term scalping with all of the volatility right now. And long-term, the perspective seems to be more bullish for NVIDIA with less indecisiveness in the bigger picture for long-term. Okay. All right. So I think this is a good place to stop. We could apply the same strategies I just did on the US 500 and on gold with pretty much any instrument that has a signal or that you draw your own, maybe support and resistance lines on, and know a little bit about the fundamentals that are going on that might affect it, and apply those principles. We could look at crude oil. We could look at currency pairings involving the US dollar. US dollar, it seems like it should be a bit bearish, meaning weak against other currency pairings. Why? Because the expectation is the US is going to lower interest rates. That tends to be a bearish effect on a currency if you think rate cuts are coming soon for that currency, for that country. So you could look at currency pairings with the USD, like Euro USD, pairings that don't involve a safe haven, okay, because that can skew things a bit. But GBP USD, Euro USD, etc. might be, if you find a nice support level, something you could think about going against the US dollar on if the technical analysis lines up, okay? And so, since I mentioned it, we could look at Euro USD. It's a major pairing that people like to trade involving the US dollar. One-day candles show a nice support level. Here, I'll just use the existing line right here, okay? This was resistance in the past. Let me get rid of some of these lines. We don't need them all. We see resistance where it hit and dropped, had trouble breaking, and then once it went above, became support at that same price area and bounced. Now here we are dropping and hitting that price and bouncing, okay? So this looks like a nice support for the Euro USD. And if we expect that lowered interest rates are coming soon out of the US, then maybe people will sell the US dollar and head towards where the euro was just a couple weeks ago against the US dollar, which is up above $1.1192. Okay, headed towards $1.12 not that long ago. And we're down below $1.11 right now. So your risk to put your stop loss below this support level is a lot less than your potential profit if your take profit is before the resistance. So to lose, it would have to break the support level that it's had trouble breaking. And to win, it doesn't have to break any resistance levels. It just has to try to get near it. And you can win what looks to be about double your risk. Okay, so from a technical perspective, this is a really nice setup with a bounce coming up off of the support level on the one-day candles, with a much larger potential profit to the resistance than you have to risk to get below the support with your stop loss. So it's a great technical trade to buy on from an opportunistic setup and from a support and resistance level setup. Now, fundamentally, you have to ask, do the fundamentals support buying here or not? And I'm leaning towards yes, at least until the data comes out on Friday, right? The data comes out showing better than expected numbers out of the US across the board. Probably the USD would strengthen with expectation, hey, maybe they won't lower rates so quickly. If the data is so strong still, they'd have fears about inflation again and leave the rates up. So if that happened, then it could go the other direction, but you have a small risk, larger reward. If the data goes the right way, you have an easy win, okay, with a much larger potential profit. Likely you could potentially reach the take profit or stop loss even before the data comes out. There'll be a lot of movement in anticipation of what the data will be. And since the expectation maybe is bad data based on the past couple weeks, perhaps the euro is able to climb against the USD even before the data comes out. Okay, if I take a buy on this and it's somewhere up here, but didn't reach my take profit yet as we get close to the non-farm payroll announcement on Friday, I'd probably close the trade early and take my profit because you don't know what that data will do to the movement. And if you're already deep in profit before the data comes out, might make sense to at least do a partial close, if not the whole thing, if you're near or in a zone where you're happy with the profit that's on the table before those announcements come and could potentially mess the movement up. So a lot of times they say buy the rumor, sell the fact, okay? It's kind of a generic statement, but right now the rumor is probably bad data on Friday, and so US dollars weakening potentially. The fact could be different. The data could come out strong unexpectedly, okay? So this is a setup where technically it looks good to buy. Maybe fundamentally the wins are at your back as well for that trade. Your take profit could be up around $1.1183, and you don't have to break the resistance, $1.1180, let's say, and the stop loss down here around $1.1012. It would have to break the support to hit your stop loss. Okay, so quite a bit better potential profit than risk. Now I need to change my trade size to risk the amount that I would want. So if I do one lot, I'm risking 711. A little more than 1%, so I'll lower the trade, 0.9. Okay, right around 1% of my balance risk, a little bit more. Looking to make over 1% on the move. Okay, and again, that 1% number, I keep using that as an example, but you can risk the percentage per trade that makes sense to you. Okay, so now I made a market move here based on the technical setup on the 1-day candles. It's a longer term type look. I'm not looking at 30-minute candles, although I certainly could for more scalping type moves, short-term trades. This is a trade that I'm looking to have it run at least until Friday and see, is it in profit before those announcements come? And if it's in a nice profit, maybe I close it off before the data comes out to retain that profit. Or maybe it hits the take profit or stop loss before then, and then, okay, I reevaluate for the next trade. Okay. I think this is a good place to stop. Any last questions, comments before we end things? Okay, great. Thank you all for joining, and thanks for the participation with a couple of the questions that came in. The questions, by the way, are not just helpful for yourself, but also for others that are maybe not thinking of the question, but the question helps them understand some things as well as we answer them. Looks like there's some movement starting on these trades. They're moving into a small profit as we sit and watch them. But thank you for joining. Good luck with the trades that you might take this evening or moving in through the rest of the week. I do expect to have quite a bit of volatility. Maybe some bearish pressure on the equities, but we'll see if that continues up to Friday. But certainly Friday's data will have a big effect on the market as it comes in as well, okay? All right, everybody, thank you for joining and good luck with your trading.